Hey everyone. You know those moments when the world feels a little shaky? Like you can practically hear the news anchors gearing up for a dramatic headline.
Yeah.
We're in one of those moments right now, and this time it's got serious implications for your portfolio.
Oh, really?
We're talking about Iran launching missiles at Israel.
Mm-hmm.
Now, I know what you might be thinking. Okay, that's rough, but I'm just trying to enjoy my morning coffee. What's that got to do with my money? And that's a fair question.
Right.
But here's the thing. Global events like this, especially in a region as volatile as the Middle East, they don't just stay confined to the headlines.
Right.
They have a way of rippling out, impacting everything from oil prices to stock markets,
Hmm.
and yes, even those financial goals you're working towards.
Yeah, you're hitting on a crucial point there. It's easy to feel removed from these events,
Mm-hmm.
but the reality is our world is incredibly interconnected, especially when it comes to finance.
Exactly. So let's unpack this whole situation because, like a lot of things in the news, there's always more to it than meets the eye.
Right.
We're not just talking about a single event here, are we?
Absolutely not. The Middle East has this long history of being, well, let's just say geopolitically complex. And this latest event, it's not happening in a vacuum.
Mm.
We're already dealing with some seriously heightened global tensions. You've got the ongoing situation between Russia and Ukraine, not to mention the ever-present tension in the China-Taiwan relationship.
Right.
To put it mildly, the world is on edge, and this latest development just throws another log onto the fire.
It's like everyone's been holding their breath and suddenly someone decided to light a match.
Yeah. And speaking of holding our breath, let's talk about how this impacts the markets.
Okay.
I mean, historically, anytime there's a sniff of trouble in the Middle East, everyone starts freaking out about oil prices.
Right, and for good reason. The Middle East is a major player in the global oil market. So any instability there sends shockwaves through the entire energy sector.
Right. So are we talking gas station price shock, or is this a different kind of energy crisis?
Well, here's where things get interesting. You'd expect oil prices to have gone through the roof, right?
Right.
And initially they did. We saw this immediate spike, about 3.5%,
Yeah.
which, by the way, is huge in the oil market.
Wow.
But then almost as quickly they started to retreat.
We really?
Yeah.
So it's not the oil apocalypse everyone was predicting.
Mm.
Not exactly. See, there's this other factor at play that's putting the brakes on oil's usual panic spiral global demand.
Okay, so explain that. Like, I'd only paid attention in econ class to impress that one person who is definitely not listening to this right now.
Basically, the global economy isn't exactly firing on all cylinders right now.
Right.
Europe's in a bit of a slump.
Mm-hmm.
China's growth has slowed down. And when those economic powerhouses slow down,
Yeah.
their demand for oil drops.
Right.
Less demand usually means lower prices, even with a conflict happening.
Okay.
It's
Yeah.
like this weird tug-of-war where geopolitical risk is pushing prices up, but weak global demand is pulling them right back down.
Okay, that actually makes sense. It's like that moment you really want that expensive latte, but then you remember your bank account balance and suddenly tea feels just as good.
Exactly. And on top of all that, you've got OPEC,
Right.
the Organization of the Petroleum Exporting Countries. Now, they're always a wild card. They control a huge chunk of the world's oil supply.
Right.
And they could easily jack up prices if they wanted to.
Right.
But so far, they've been surprisingly quiet.
So what are they feeling generous these days?
It's more complicated than that. See, OPEC has its own internal politics and priorities. Right now, it seems like they're more concerned with maintaining stability in the market than maximizing their profits in the short term.
Right.
They're playing the long game, which adds another layer of complexity to this whole situation.
Man, who knew oil could be so dramatic? It's like a reality TV show we're all forced to watch. Speaking of drama, though, let's talk about the classic safe haven asset gold. Every time the world gets a little wobbly, gold seems to be the go-to, right? Did it live up to its reputation this time?
Absolutely, gold did exactly what it was supposed to do. It went up way up. In fact, during this whole period of uncertainty, it surged to an all-time high.
Wow, all-time high. Gold bugs must be feeling pretty smug right now.
They probably are, but it makes sense. When investors are nervous, they flock to safe havens like gold. It's tangible, it's historically held its value, and there's this sense of security that comes with knowing you've got a piece of something that's literally been valuable for centuries.
Yeah, you don't see people hoarding Bitcoin like they do gold bars. Speaking of which, how did everyone's favorite digital darling perform during all this? Bitcoin likes to bill itself as digital gold, right? Did it follow gold's lead?
That's where things get really interesting, and not in a good way, at least for Bitcoin believers. You see, instead of rising with gold, Bitcoin actually dropped, and not just a little bit. We're talking almost a 5% decline.
Whoa, seriously, that's a pretty brutal reality check for something that's supposed to be a safe haven.
It really is, and it throws a major wrench in the whole digital gold narrative, wouldn't you say?
Right.
Because if Bitcoin were truly a safe haven, uncorrelated to traditional markets and all that, it should have gone up, not down, when uncertainty spiked.
So what happened? Did Bitcoin miss the memo?
Well, it looks like Bitcoin's been acting more like a risky tech stock lately,
Huh.
closely mirroring the movements of the Nasdaq-Q.
Hmm.
Remember how we talked about global demand being down that impacts tech companies, and it seems like it's impacting Bitcoin in a similar way?
Right.
This whole situation has exposed a vulnerability, a lack of independence, that really calls into question its long-term viability as a safe haven asset.
Okay, so that's oil, gold, Bitcoin all over the map. But you mentioned earlier that this goes beyond just the immediate market reactions. What's the bigger picture here?
This is where it gets really interesting, at least for those of us who love a good economic puzzle. You see, the Middle East conflict, as significant as it is,
Right.
it's really just one piece of a much larger global economic picture that's been developing.
Okay, I'm intrigued. Lay it on me. What's this bigger picture look like? Okay, I'm intrigued. Lay it on me. What's this bigger picture look like?
Well, we're starting to see signs of a potential global economic slowdown.
Slowdown meaning recession. Should I be dusting off my old recession playlist?
Not quite time to hit the panic button, but it's definitely something to keep an eye on. For example, let's look at what's happening in Europe. France and Germany, two of the biggest economies in the Eurozone. Their inflation rates have dropped significantly.
Really? How significant are we talking?
France went from 2.2% inflation to 1.5%, their biggest drop in decades.
Mm.
And Germany's seeing a similar trend.
Wow, those are big drops. So what does that tell us? Is it good news or bad news?
Well, it's complicated, as always. On the surface, lower inflation sounds like a good thing, right? Less expensive stuff. But it also suggests that demand is cooling off. People are buying less, maybe because they're worried about the future or maybe because interest rates are higher. And when you have major economies like those two slowing down, it has a ripple effect on the entire global market. Remember how we talked about weak global demand offsetting those oil price spikes? This is all connected.
Okay, I'm starting to see how the pieces of the puzzle fit together, but what does it all mean for me and for everyone else listening right now? What are we supposed to do with all this information?
That's the million-dollar question, isn't it? And the answer is unfortunately not a simple one. It's not about panicking. It's about being informed and prepared. Ask yourself, what if this slowdown spreads? What if the US starts seeing similar trends? Because that's a real possibility. And it's worth thinking about how that might impact your own personal finances and your investment strategy.
Okay, deep breaths, everyone, deep breaths. We went from missiles to markets to maybe a recession. It's a lot to process. But hey, that's why we do these deep dives, right? To break down these complicated topics and hopefully make them a little less intimidating, a little more manageable. So, as you're thinking about everything we've discussed today, here's a final thought to ponder. We focused on oil, gold, Bitcoin, all assets that tend to react strongly to global events. What other assets or industries out there might be affected in ways we wouldn't expect? What's flying under the radar? Something to chew on. And as always, keep learning, keep asking questions, and keep diving deep.